On to your markets now. Asian markets closed generally up positive in positive territory. In China, a major Communist Party meeting is said to have resolved that President Xi Jinping should remain the country's top leader for life, although this decision has not yet been formally announced. Over in Japan, the Nikkei share average rose by 1.13%, while in Hong Kong, the Hang Seng Index ended the day up 0.32%. In the mainland China area, the Shanghai Composite rose at a slower pace, up 0.2% at the close. Over in the United States, the S&P 500 ended essentially flat on Thursday, with chip makers helping push the Nasdaq into positive territory, while the bond market was closed in observance of Veterans Day. The Dow Jones Industrial Average fell 0.44%. The S&P 500 gained 0.055%, and the Nasdaq Composite added 0.52%. All right, let's take a look at the markets with Nesan Nair. He's a portfolio manager at Sasfin. Thank you very much for joining us, Nesan. So what's been the main global story of the week, would you say? And what's your reading of global markets today?
Yeah, good afternoon, Nampu. I think very definitely the US dollar strength has got a lot of people focused on the trajectory of interest rates in the US, but also throughout the rest of the world. You know, we saw the rand volatility in the rand during the course of the last few weeks, well, as a direct consequence, of that US dollar strength, inflation being one of the biggest concerns people have at the moment. And as you can see, with the rise in commodity prices we've experienced, in the last sort of 18 months during the pandemic, it's very clear that the inflation we're seeing in the materials or in the commodity sector rather is going to filter through to the mainstream economy at the moment, which has got the market really concerned.
Speaking of commodities, let's look specifically at the oil price. We know it's had a really good run, seems to be losing steam. Could we see it falling below $80 a barrel? And how do you see the fundamentals?
Yeah, so I think very much a realistic probability, that one, more as a result of the strong dollar. You remember, oil is quoted in dollars. And, if the dollar strengthens relative to all other real assets, then you will find that being reflected in weaker sort of commodity prices. So, in rand terms, a good way of looking at it is the rand's also weakened against the dollar on the back of that dollar strength. So in rand terms, the oil price hasn't changed that much. And yes, I think it might actually fall below that $80 level, but only in the short term. I think the long-term trajectory for oil still remains upward. Of course, that's not what consumers, I'm sure, want to hear. But that's just the whole inflation story playing out in the commodity price, which I still think has got a fair amount of legs.
Now, of course, the big deal yesterday was the midterm budget. Growth is expected to exceed 5% this year. But over the midterm, the National Treasury sees growth at an average of 1.7%, which is really not very exciting at all. What was significant for you, and have you seen any sectors benefiting from this today?
Yes, I tend to agree with you. We need to have growth well above sort of 1.8 to 1.9% sustainably in order to create jobs. And I think that was alluded to in the budget. For me, the most significant aspect of the budget is really, the hints we get about sort of policy direction that's going to take place. Because the numbers are fairly well sort of communicated or estimated by the market. We follow the numbers on a daily basis. But it's really, the thinking and trying to read between the lines that's important in the budget. And I think the fact that the minister said we cannot continue, with the extent of social spending, of expenditure, without growing the economy. We need to grow the economy. We need, to create jobs, to give people employment, to give people that sort of dignity, and to help uplift the country sustainably over a period of time. In order to meet those social objectives. I think that was very important, very positive. And of course, the bond market, you asked me which sector performed the best. I think yesterday's bond market rally, especially in the long end, probably probably a relief rally, if we can call it that, because the extent of the spending that we've seen in the last year and a half obviously going to be reined in. Finance Minister very serious about that as being a primary objective of Treasury.
And then lastly, luxury goods retailer Richmond reported half-year sales up 63%. It does seem as though the well-heeled don't appear to be constrained. Your thoughts on this particular stock?
What a great number. That's all I can say. You know, the stock was up, I think, 8 or 9%. I think it was maybe even been higher than that during the course of the day. I have been watching it. The truth is, you know, it's been a long wait for a lot of Richmond shareholders to see this sort of improvement, underlying improvement. Holders of other luxury companies like LVMH, for example, would have seen sustainable improvement in the share price over the last 10 years. And Richmond seemed to be a little bit of a laggard, but it seems to be waking up now. Certainly, I think from an investor's perspective, those investors in Richmond, nothing to complain about today. The all-share index was up basically because of this 10% movement in Richmond. So I think we're all very pleased with that.
Excellent. Thank you very much for your time and insights. As always, Nesan Nair, he's a portfolio manager at SABC.